Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Tuesday, March 22nd, 2011. This morning I'm talking about inflation still rising, and particularly in the UK I'm talking about here. We're looking at a chart here on the 5-minute of pound-dollar cable, as it's better known. And this morning the UK came out with their CPI data, and it's coming in much hotter than expected. They were expecting 4.2%, actually came in showing a rise of 4.4%. That's the largest rise in over 2 years. And you have to remember that even in that 2-year period, that was during that, huge financial crisis that we had in 2008. So people were willing to put up with inflation at that point because, all the other economic metrics were crashing. But generally speaking, the Bank of England, their target rate is 2% inflation. All right, anytime they're over 3%, they have to write a letter to the Chancellor of the Exchequer, the government, basically explaining what's going on. So this is very high inflation for the UK. It's going to be interesting to see what happens tomorrow. The Bank of England minutes from their rate policy meeting are coming out, and we're going to see what they're thinking with regards to inflation. I mean, at this point, the inflation story has gotten a little bit hotter than expected. All right, we've got the core CPI that came in 3.4% versus 3.1% expectation. Retail price index came in showing a rise of 1% versus a 0.7% expectation. So there's a lot of inflation going on in the UK, and it seems kind of likely that they may have to do something about rates here pretty soon. But the problem they have is that if you look what's happened, all right, basically the pound dollar's gotten right up to about 164, which if we go back and we look at this on let's just use the daily charts here. All right, you're going to see that in the last say year or so, okay, this is breaking out to a new high. So if the UK raises rates from this level, and the U.S. does nothing to follow, then we could potentially, get back up to the 168, 170 level. I mean, that's not out of the realm of possibility. So I think the B of E's really painted themselves into a corner right now because they haven't been maintaining the inflation expectation, and that's going to strengthen the pound, which, if the pound gets too strong, that could hurt England's exports. So we'll have to keep an eye on what happens there. But interesting dynamic. Some other stuff going on. We got the Aussie higher. Basically, it's the daily. Let's look at it on a shorter term. Here we got the Aussie moving higher. All right, we've settled in well above parity here. Basically, we're still moving on dollar weakness. There's quantitative easing too. Right now, dollar should be weak. I mean, were it not for the natural disaster that happened in Japan, which is just an awful thing, and for all this turmoil going on in Libya and some of these other Arab countries, all right, the dollar might be a lot more weak. So just looking there, we've got euro firmly ensconced as well over 142. What else is happening? Yen's actually settled down. All right, we've gone pretty flat here. I don't think anybody wants to try to test the the will of the G7 here with the intervention. But nobody's really selling off yen at this point. So you can see it just sort of settled in, done this like little sideways routine. But obviously, you can see the volatility over the past week of what's happened. This chart just looks like a trader's nightmare, or it could be a dream if you're very fast. A very short-term trader's dream, maybe an investor's nightmare. So, that's what we're looking at there. Just want to take a quick peek at the Canadian dollar. Okay, Canadian dollar is actually a little bit lower because it's we've got oil prices pulling back. But what's taking place here is that they've got their retail sales index coming out in about another hour or so this morning. So we're going to have to see what happens there. But retail sales, if they come in a little bit higher, then that could be a good thing for the Canadian dollar as well. So we still got some CAD strength happening. And let's just look at this on the, let's look at it on the daily chart. I think we're going to probably be reapproaching the new highs for the Canadian dollar versus USD here, just coming on to 97 cents. So, interesting dynamic as well. But, really, markets are about a couple of things right now. Oil prices related to what's going on in Libya and these other Arab countries. What's happening with the Japanese nuclear situation? Does that get better? Does that get worse? And then a weak dollar story based on Fed monetary policy QE2. So not really a lot of news coming out of the U.S. We got a housing price index coming out and the Richmond Fed manufacturing index. But that's really going to be about it in the U.S. here. So we'll have to see how the markets react. Stock markets had a pretty good 3-day climb after the fallout from the earthquake in Japan last week. So we'll see if that can continue or if it pulls back. And if it does pull back, then we would expect to see maybe a little bit of dollar strength and maybe a pullback from some of these recent highs here in pound and euro. So that's what I'm looking at for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.